Hello traders, welcome back to the channel. This is Janoy with Trading the Charts Pro, and guys, we're back with one more video where we're going to break down the overall market, guys, and we're going to talk about everything in detail that's basically been taking place in the stock market, and how should we be looking at these indexes as we approach this upcoming week, March 28th, right? So there's a lot we have to unpack in this video, guys, so stay tuned and let's dive deep and just break it down and look at these patterns and see what these patterns are telling us, and how do we take advantage of these patterns to bring in profit, whether on a daily basis or an intraday basis, or on a swing trading basis. All right, so let's dive in deep today. All right, so we're gonna start off with the Dow Jones index, guys, and we can see Dow Jones is still in a pretty critical place, guys. This thing has been downtrending, right? We talked about this a little bit last week. Over the last week, this thing put in its first higher low, right? So it bounced off this downtrending support here, which, remember, when we're in a downtrend, we will have a downtrending resistance, and you will also have a downtrending support, right? So remember, while we're in a downtrend, we will short the resistance, right, the rollover, and we will look to cover on the bounce of support. All right, so price come down, hit support, buyers came in, take it up, price pull back, and we have major buying came back in right around the 33,000 level and push this thing back up into its downtrending resistance. Very nice consolidation, and at this point, we start to break out of what looks like a bull flag. But as the market open next week, the most critical thing that I'm watching for the Dow Jones is this 200 simple moving average, right? So everybody knows that once the market falls below its 200 SMA, we're 100% bearish. The market is considered to be bearish. Now, the Dow Jones Industrial Average is staring its 200-day SMA in its face. It's like that Glock. You're looking straight down the barrel. So next week, we want to see this thing break above 35,000 and start pushing back up, and then that would actually be a official. It's already breaking down out of the downtrend a little bit, but we want to see it close very strong above 35,000, and then at that point, it is very clear that the Dow Jones Industrial Average is ready to make its move back to the upside. All right, so we can see a very nice downtrend, boom, break out of the downtrend, consolidating under the 200 SMA is critical. If the price cannot break above the 200 SMA, then guys, we're going to see this market roll back over. Is it going to roll over and continue back into the downtrend, or is it going to just roll over, use the downtrending resistance, right, as support and attempt to break back above the 200 again and try to go higher? So there's nothing really to do yet. We gotta see one of those situations, either the breakout to the upside, right, which would be a very bullish case, or a breakdown below the downtrending resistance, which is anything back below the 50 SMA, sub 34,381. Bear with me there. Right? So that's what we're looking at for the Dow Jones Industrial Average. Very nice move from the bottom up into this consolidation. We want to see that breakout to continue moving to the upside. And things that are in the Dow, like Apple and those stocks, they have been moving up pretty strong. So I am really on the bias side that there is a probability that the Dow will probably break out and continue moving to the upside. All right, so now, guys, we're going to look at tech. This is one of the best sectors if you're looking for fast growth. Yes, it's a critical time right now where growth may be hampered a little bit due to increased costs from buying from borrowing, given that interest rate is subsequently going up. So the cost for these companies to borrow money is not going to be as cheap as it once was before. Therefore, this is going to affect both their top line and bottom line when it comes to earnings, when it comes to profit, when it comes to earnings per share. It's going to be affected. But we all know that great companies know how to navigate all conditions. So regardless of the fact that borrowing money may become a little bit more expensive, these companies have different strategies where they will invest money that they've borrowed in more efficient manner to get a greater return, which will come back around and hit the bottom line and the top line, and everything, in my opinion, will work itself out. All right. So though people feel like it's all doom and gloom, everything is over, guys, you gotta think ahead. You gotta think beyond the craziness. At some point the craziness must clear up and things must get back to blue skies, right? That's how I actually look at everything. All right, so as far as NDX, guys, very nice downtrend. Last week I put out a video when we were sitting, our price was sitting right around 14,000, and I'm like, hey, are we going to get the breakout today? And yes, the market did actually break out out of this downtrending resistance. That every time it approached that downtrending resistance not too long ago, price would get rejected and price would continue moving back to the downside. However, earlier, I think it was last week Thursday, market popped above that level. We got a continuation. Entire this week the market just continued to rally, break above its 50 period or 50 simple moving average, and now we have the NDX approaching its 200 simple moving average. We know that back here when the market fell below the 200, this is where we're considered in bearish territory. All right, so now the market is approaching back into that 15,000 level, and if this market is able to break back above its 200 simple moving average, then we're looking to recover out of this bearish territory and continue moving to the upside. Is there a probability that the NDX can come up to 15,100, the simple moving average, get rejected, roll over, and continue moving back to the downside? That's a probability, but I don't see the market doing that, because the market likes clarity, right? So now the market actually knows that the Fed is fixing to raise interest rate at least 5 times for the for throughout 2022. The market knows that. That's a fact right now. So before, the market wasn't sure, the information wasn't clear as to exactly what the move was going to be from the Fed. But as soon as everything became a little bit more clear, you guys realized that the market started to rally, because the market likes clarity. The market is forward thinking. So you have to look at the charts, look at the pattern, and also anticipate based on the probability where price action is going to go. In this case, price action hit support, price action came back, hit support, price action hit support again, and now we have a breakout. Now, as far as pattern recognition goes, guys, this pattern is simply just a ascending triangular pattern, right? What do I mean? All I mean is that price action is moving in an uptrend, right? It hit a snag, come back down, form a horizontal base, and now the downtrending short-term resistance that was holding the market down, price action break above that. When that happens, now the market usually continue move in a upward direction. All right, so the context of this pattern, in my opinion, are not just my opinion, but based on my trading experience, guys, this is looking very nice, like a ascending triangular pattern, where this thing can come back up and the market can continue moving in an upwards direction. So based on the information that we have right now, this is how I'm looking at the market. This is what I'm expecting. So next week we're looking to see how will this market react in terms of the NDX as it approaches its 200 simple moving average. All right, so I'm still long up to the 200 simple moving average, and then I will see how price action react to that level, and then I'll make some more decision as to, do I take a little bit of risk off, or do I, just move back to the sideline in an anticipation of a price moving back to the downside. But based on what this chart in the S&P 500 is actually showing me, this chart pretty much may be, just a guide as what is to come inside NDX, and also what is to come inside the Dow Jones Industrial Average, right? And now let's dive in deep to the S&P 500 to see, what exactly am I talking about. All right, so as it relates to the SPX S&P 500, guys, the context is still the same. The pattern that I'm seeing, or I see present here, is a ascending triangular pattern. Market bullish in an uptrend, hit a snag, move into a triangular pattern, and then we break out of that triangular pattern. Market usually continue to move higher based on pattern recognition. All right, so when I look at the S&P 500, what I'm seeing is a big, bullish market that is ascending, moving in an upward direction. Price start to fall, and when we look at the big picture, this thing is really just a very big triangular pattern. Now the downtrending resistance, right, boom, that forms the triangle, or that was, the resistance that was holding the market down. We officially had the breakout. My last video there, talk about it, and ever since the market has started to move up, break above the 50 SMA, price break back above its 200 simple moving average, nice consolidation, and now right now the market is sitting at a 61% retracement level, right? So what can happen next? Can the market get rejected here and pull back, test its 200 simple moving average, and then we get a bounce, and it's pretty much 100% retracement where we're looking for the market to come back and test its all-time high? Why? Because most of the time when the market, makes a high, even if the market is going to go lower, you will find that the market will come back, test that high, or come up and make a lower high, right, in terms of the big picture, and then the market sells off and goes lower. So as it is right now, I do continue to see a bullish opportunity back to the upside, both in the NDX and the S&P 500. Right, NDX, yes, the market still needs to break above its 200 simple moving average, and that will open the door for price to continue moving to the upside in the short term. Right, so pretty much it's straightforward here with the S&P 500. Let's move on over to this one that is a little bit more technical, because it's not clear what exactly this market wants to do as yet, but let's break it down. And this is the Russell 2000 small cap stocks. Guys, this market basically, dive down into a downtrend after it was moving sideways for a very long time. Try to break out upside, that never worked. Price come down, took out this horizontal support, right? Came down, made new short-term lows, bounce, came back to the resistance, which support becomes resistance over here. Number one time, price got rejected, came back down, support, which was support 1 here, became support 2. Price bounce, got rejected again, and came back down. So guys, this is where you have to pay attention, because even though it came down, it didn't come down and touch, 1900 again. So this is pretty much like a small higher low, which is a sign that the market is looking to at least move back up to the short term. In the short term, price rallied, break out of the downtrending resistance, right? DR, downtrending resistance, where price got rejected twice, here, and earlier this week we got the breakout. But in the last video that I just suggested, I mentioned even though price is breaking out of the downtrend, we have another critical level that we have to watch out for, and this critical level is our old support, because when price falls below support, support has the probability of turning into resistance, and resistance is going to prevent the price action from moving higher, or in other words, traders are going to look to short as price rally into that level in anticipation of a rollover, right? So now price came up to that level, or has come to that level, and what we see is a very nice consolidation. So this consolidation is setting up to be a situation where price eventually break back above that support. That's what I'm anticipating based on trading experience. That's typically what happened. If price is unable to break above that level after many attempts, then you will ultimately get another rollover. But when we look at the context of how price action will move in a downtrend, switch, go sideways, and sometime continue moving down if it's going to be a big downtrend. But price can move down, consolidate, and then break out and move back into the direction that it was coming from. All right, so this one, we just have to wait and see. If we break above this 2077 level, then I'm looking to see this thing come back up into testing is 200 simple moving average. All right, so guys, this is what I'm looking at for this week. Another thing you can also look at is your VIX, and what I'm seeing with the VIX is back at support, so we got to watch this thing, guys, because big picture, I'm also seeing where the VIX is, it's trending, it's making higher lows, higher highs, somewhat higher lows here, but here it didn't really make a new high anyway. The VIX is trending down, it's back at support. So what this means both for the market and for the VIX is that next week everyone is watching critical levels to see how the market reacts to those critical levels. All right, so as far as the VIX, people are watching, does the VIX break down below 20 and start coming back down to like 16? There's a probability. Or does the VIX dance around here and allow the indexes to continue moving to upwards direction? All right, so always keep an eye on the inverse relationship to both. The VIX goes lower, the market continue to move higher. The market comes down, then you will ultimately see a spike in the VIX. And this is the full review of this week market analysis. I hope you found some value inside this video. If you watched to this point, I thank you very much for watching. Please subscribe to the channel and look forward to new content that I will be bringing soon. Thank you very much for watching.